Well, Kenya's economic growth prospects continue to dwindle, majorly driven by the ongoing political stalemate, among other factors. Well, from the International Monetary Fund, the World Bank, and even the National Treasury, all of them have projected or have lowered their growth projections for the year 2017. The question is, how poor will growth be this year?
Kenya's economy is at a crossroad. After 4 years of record-breaking growth, a major political standoff, severe drought, and a crippling credit crunch have all conspired to dim economic growth in 2017. Already, economic growth for Q1 of 2017 has been disappointing at 4.7% compared to 5.9% in the same quarter of 2016. Analysts expect the second quarter to fare even worse. The International Monetary Fund says economic expansion will drop from 5.9% in 2016 to 5.0% in 2017. IMF cites prolonged political uncertainty, the interest capping law, and the ongoing drought as reasons for their decision to slash its forecast.
If you look at the last 3 weeks, the events, the political economy has been very untidy. Economic activity has dwindled. There's very little happening on the streets, which means even at the micro level, we are not seeing any serious business engagement. So even the 5.5 that we were talking about at the beginning of this year might not be achievable. I mean, even getting a 5%, because normally the second half of the year is supposed to be the most productive part. And if it's being occupied by the current situation, we might even sort of see the things go below 5%, which should be unprecedented for the last 10 years.
Chief economist at Mentoria Consulting Ken Gichinga says growth is likely to be weakened further by a severe credit crunch. The NASA coalition has been organizing weekly protests in various parts of the country, which has dampened the business environment. He says if politicians fail to reach a compromise, economic growth will tank to below 5%, the worst in 5 years.
Kenya is considered one of the most democratic spaces in Africa, and it's one thing investors love. Investors love democratic space. They love predictable institutions. And it's clearly, no matter how you want to look at the current situation, what you can't debate is that Kenya has strong institutions. So in the long run, I think people will take that positive view. Obviously, the path is going to be a bit tricky, but I still have so much confidence in the outcome of this economy.
The government's revenue collection for the fiscal year 2017-2018 is behind target by close to 30 billion shillings due to lower collection from the Customs Department. However, the National Treasury is optimistic that improved rainfall and infrastructure spending will pick growth in 2017. O'Brien Kiman for Business News Hour.